Well, good Friday morning. This is Rich, and welcome to my latest edition of the Thinking Cap. Today, we're going to talk about the charts once again. I thought heading into the weekend, a pretty important chart weekend. We've seen a lot of movement in the markets over the last several days, and rather than write about it, thought it'd be just as well to talk about it. And so, I want to point out what's going on in each of these markets. Now, I do want to invite you each day to check out my heat check column in the market report email letter. Inside that column, you can see here the red commodities. Those are the hot markets right now. Those are the markets that probably need to be addressed. Probably ought to be looking at either doing some scale up selling, minimum price sales, something to protect prices, because what often happens when markets are hot for a while, they simmer down. And we've seen that the last few days, the corn market, the oil market kind of dipping back. The opposite of that are the not markets. Those are the ones in blue. We got the cotton market continuing to be oversold. We'll look at that here in a minute. But we did have hogs kind of bounce back out of that. So we don't want to be making sales when markets are in the not zone. We want to be hopefully patient at that point in time and looking for some better opportunities. So with that, I'm going to take you over to my commodity pages, and we'll look into each of these charts. Let's start off with the corn market. The corn market had a nice rally, has had a very nice rally over the last month. You can see here in July corn that we've pushed from a low at 435 3/4. And you go back and look at some of the indicators, especially the RSI and the green and the stochastics and the red and the blue at the bottom of the chart. Those are the indicators that I use when we look at the hots and the nots in the heat check column. And so at that point in time, you had stochastics well oversold. You had the RSI down in the 30s, around 40. Market was at a point we just didn't want to have to be making any sales at that point. We were looking for better opportunities. And then things started to bounce. We saw the funds. That's been the big story over the last month. The funds have bought back a huge chunk of their short position, and they've been able to push this market up through the 9-day moving average. And I've got these labeled now: the 9 in the red, the 20 in the blue, the 50 in the gold. We pushed through those three. Then we pushed through the 100-day moving average. And then things kind of stalled out. We were not able to get back to the 200-day moving average. Let me expand this on here, because I want to go back and see when was the last time the 200-day moving average. The last time we touched it was in July last year. The last time we traded above it was in June when the market spiked. And again, that was that seasonal type rally we tend to see. And I talk a lot about the seasonals, but the seasonals do hold true. This is the time of year when the markets give us our marketing opportunities. So we definitely want to take advantage of it. Now, I don't know if we've got enough to nudge this market back up to the winter highs. It's going to take something dramatic, because remember, we've got 2+ billion bushel carryout. The market knows it. And so, yes, the funds have bought back a chunk of their shorts. Will they go long? I guess that's the big question. Now, the last 2 or 3 days, it's been selling. We've seen this corn market sell back down a little bit. We failed up at the 200-day moving average, turned back down. We've had, 3 straight lower trades now. We've traded back below the 9-day moving average. The RSI has turned down to 50. Stochastics pushing down into the 60-50 range. So this market, for the most part, neutral here as we head into the weekend, and sitting back at these moving average lines, the 100-day, the 20-day in the blue. We've kind of gone back within this cluster again. So our selling opportunity is probably, behind us at the moment in July corn. We've had it. And if you go back and look a few days ago, we had this market in the hot zone for several days. We had the RSIs in the 60s, stochastics up into the 70s, 80s. That market gave us this opportunity. Let's switch over to December corn. December corn gave us a very good look on the chart. Again, the RSI and stochastics pushed up into overbought territory. We got to the 200-day moving average line. We peaked out at 496 3/4 just a couple of days ago. Weren't able to get to $5. We had that chart gap at 502 1/4 to 503 left back here at the beginning of the year. We were not able to get to that as well. So if you had your offers in at $5 even, the lesson to be learned there, and I've learned this the hard way over the years too, is that, those even numbers don't tend to hit a lot of times. If you like $5 corn, there's nothing wrong with 498. Well, 498 wouldn't have got hit either, but point being is that you know, you may want to fade those by a few pennies from those even numbers. So here we are back into neutral territory again today. Today, I don't think I would be a seller necessarily. I'd wait for the next bounce. We'll get a commitment of traders report Friday afternoon after the close, probably show us that the funds have bought back a huge part of their short position again. So do they have enough bullets? I guess that's the question. If you sold 480 the first time around, going up, when we broke through the high from the spring, and you know, I think that was a good sale. We talked about that last week in the aftermath webinar as being a good target. We were above the crop insurance price. So nothing wrong here with being able to make a few sales if you want to trickle out some bushels this morning. I want to show you a bonus chart on corn. Let's go ahead and look at December 25. There's been a little bit of talk about the DEES 25, and you can kind of see as it sits today, you know, the markets have backed off about a 9 cents, 8 cents off the high. We're within this little pennant formation right now. Got to 499 and a half. So again, if you had an offer in at $5, didn't get hit. We do have a little bitty chart gap. I don't have it marked back here, but up a little over about 504, 505, I believe it is. So I guess I can look because I got a live chart. 502 and a half to 504 is where that gap is. So might be something to look at as well. But there's been a little talk about these 25. You can utilize products like R Powered if you want to lock that in for your crop insurance price. There's some different tools that you can use for that. But $5 corn seems to be kind of a magical number. Switching over to the beans. Beans have not participated like the corn and the wheat markets have. You can see here in the chart, you know, we're sitting right about the middle of the range. But you look overall, we've had $1.10 rally off the low from back in mid-April. So it was a heck of a move. That really driven by the late harvest in Rio Grande do Sul, by the loss of probably 3 million tons of beans down there, it sounds like. And so the funds covered a big chunk of their short position in the bean market just within about a 4-day window. And then things have kind of settled back. And you can see where all these moving average lines are all within what, 20 cents. So that tells me that the market, that's kind of its equilibrium price. And today the RSI at 59, stochastics, you know, things have turned a little higher with today's trade, but I really don't see the fundamentals to back this up. Bean sales, China's been, you know, non-existent when it comes to new crop bean sales. And if I look at the November contract here, the one we're using for crop insurance, we're better than the crop insurance price. That's always one of my targets. So we've done that. But we were not able to get back above the 200-day moving average, stalled out there. Did not get back to the chart gap, 1237 to 1244 and a half. So here we are kind of stalled out in kind of a mid-range price as we speak today. But I do think that 200-day moving average, again, good goal, 1230. So maybe 12 and a quarter is my offer. Probably be a good place to be looking at making some sales. Switching over to the wheat. Wheat's been the biggest mover lately, and you can see Chicago wheat just in the last 4 weeks we've gone from 550 to 697. Fantastic rally. We've had this market in the hot zone for several days now. Now you've got the RSI up into the mid 70s, or was 2 days ago. Stochastics up into the 80s. Now things have kind of simmered down. But one thing that's important to watch on this chart is this 9-day moving average line today. Will we hold that going into the close, 658 and a half? And if we do, I think that continues to kind of trigger more potential upside in this market. Now we have traded back under the crop insurance price. And I did mention in the aftermath that that's always, again, one of the goals I've got marketing is to improve on that. And so we have had the opportunity to do that. And so not a bad place. If you got some good looking wheat, man, I think I'd want to take advantage of this rally because this beats a heck out of 550. USDA was talking $6 average farm price this year, and that seemed like a stretch a month ago. So this looks to me like a pretty good sale in soft red wheat country. Switching over to the hard red wheat, we go to Kansas City, July. Very similar looking chart, although relatively speaking, we didn't see the rally as big, but we have rallied up over $7 a bushel. If you've had good wheat, not a bad place to be making a sale. Today we're at 671 and a half. Again, the indicators have backed off a little bit, but we're sitting right at the 9-day moving average. Can we hold that into the close today? I think that's the key for this market. We're still below crop insurance price at 734. So that part of it doesn't impress me a whole lot, but I do like the idea of taking advantage of $1.50 rally. So if we get a little bump here off this 9-day moving average and you haven't made a sale yet, this would be a good time to step back in. Minneapolis July wheat, we'll look at that. Then we'll quick look at the September contract. Again, we've rallied over $1 a bushel. Very similar looking chart. We're holding the 9-day moving average right now. Can that hold? Stochastics and RSI have turned lower off this recent high. So we did get to a main objective, and that was the 200-day moving average. Hopefully you were able to maybe liquidate the rest of your old crop spring wheat. Looking ahead to new crops, spring wheat. Again, we got through the 200-day moving average. That was a target from last month. So hopefully we're able to make a hedge there, 750 a bushel or so. We're holding again the 9-day moving average today. So all three of these wheat markets, that's going to be very key heading into the weekend. Can you hold the 9-day moving average? If it trades through it and we don't have any additional bullish news, I would tend to think that's bearish come Monday, or maybe even bearish going into the close today. So watch that throughout the day here today. The cotton market, let's switch over to July cotton. Ugly. I can't say much else. It's, we've had we just haven't had the support from China, number one. And I don't even mean China buying, just the threat of China buying, the Chinese economic news, anything positive to spin this market. It just has been missing in the July cotton market. And you can see the 9-day moving averages, red line. We've just continued to follow that down. And to get something changed here, we need a change of direction. Can the stochastics cross higher? Can the RSI turn higher? Can you get a close above the 9-day? Can you get a close above the 20-day moving average, which we haven't done since back in March? Those things would help. And if you've got old crop cotton, I guess I would be looking at this cluster up here around 85 to 86 cents as a good target to the upside on a rebound in the market. Looking at December cotton, let me switch over to that chart. December made it low 2 days ago again, traded below 74 cents. But again, the market closed higher yesterday. Can you get a higher close today? Can you get back above the 20-day moving average? And if we do, I think that could give us a run back up around that 80-cent level. And that would be at least a target to maybe trickle out a little bit of a hedge. Now, I don't think I want to get hog wild. Again, we're below the insurance price at 83 cents. Those that bought Stacks insurance, at a 90% coverage, if you had an average county yield, then an 8-cent loss in price, 75 cents, basically puts you about in the money. So I would say the cotton market, you've got to put right now around 74, 75 cents. To me, this is a level I don't want to touch as far as a sale, but you get up around that 80-cent level, not a bad place to be maybe trickling some out. Switching over to the livestock market, the hog market I mentioned left the knot zone and moved into neutral yesterday. We were able to rally cotton a little bit off this 100-day moving average, pushed back above the 9-day moving average line, this red line. Now today we're back below it again. And so I've considered this market neutral, probably neutral to low right now, but can the 100-day moving average, the purple line, hold into the close today? Can we get back above the 9-day? If so, it might give us a chance to extend back to the upside. But I might have been a little preliminary taking it out of the knot zone. I don't want to be a seller here, of course, but I do look for that 100-day hopefully to hold as we head into the weekend. Looking at cattle, August live cattle. Here we go. We were in this pennant formation, things kind of narrowing down over the last several months, have been trending higher this week. We pushed up to the 200-day moving average line, that blue line, light blue line. Stochastics have moved up into the 70s and 80s. RSI close to 60. This market, if we're able to break through the 200-day, then I'm looking at that downtrend line somewhere up here around 180 or so as a good target, 184, something like that. I think would be a good target to making a sale. Not too far from putting this one into the hot category. The feeder market, same chart basically. We're in a pennant type formation. We've got the 100-day moving average line right above us. Can you get through that? Maybe push up around 265, 266, something like that, maybe give us an opportunity to make a sale here. Indicators all pointing higher right now, so we'll see if we can extend this as we head into the weekend. So that's about it. Just want to give you a quick freshening up of the charts. You can see where we're trading as we're recording this. Corn just a fraction lower, soybeans getting a little push, cotton market nothing, wheat's now trending a little lower here. So we'll see if those moving average lines can hold in the wheat market as we head into the weekend. So with that, thank you for listening to the latest edition of the Thinking Cap. Hope you have a great weekend, and I'll talk to you again very soon.